cover here. So welcome to the Nadex Application and Strategy webinar series. My name is John Skelton. I'm with apexinvesting.com. We do these webinars every Monday night at 7 p.m. Eastern Time for Nadex. Let me get a couple of our disclosures out of the way here so we can get moving. Trading futures, options, or any financial instrument involves risk, may not be suitable for every investor. Any trading decision you make is your sole responsibility. Contents of this webinar are not an offer or a solicitation of an offer to buy or sell any particular financial instrument offered by Nadex. And as always, past performance is not indicative of future results. So, like I said, last week we talked about some basics here. If you're brand new to Nadex, Nadex basically offers two different products. They offer binary options and spreads. And you can go over to nadex.com. You can kind of go through the tabs here and read some information about binary options and about spreads. We're going to be covering spreads tonight, the different markets they offer, and some education. I'm going to show you where else you can get some education here in just a little bit. Also, if you're brand new, go right here to the trading tab, second one down, demo trading platform. Nadex will give you a free demo account, okay? And all you got to do is sign up, create a username, and enter some quick information here and press submit. In just a few minutes, you will get an email with a temporary password. You can log right into the Nadex platform with a demo account. They'll give you $25,000 in a demo account, demo money for you to play with, get familiar with the platform, get familiar with the different products they offer, entering and exiting orders, and so on. Okay, any new strategies or systems you're trying to play with and master, you definitely want to play with and master those in demo and not with your live money. So if you don't have a demo account already, go ahead and hop on and get one. Do that right now, even while we're on this webinar. Might help you as we go through a couple of different things tonight talking about spreads. I'll be referencing the platform a little bit. After you do that, hop on over to our website, apexinvesting.com. You can go right here to join free now. You can create a free username and password that'll get you free access to our website, to some free tools, a bunch of free education. Once you create a username and password, you can log right in. Don't be overwhelmed. There's a lot of information on our site here. Just want to direct you to a couple places to get you started. If you go right here to our weekly webinar calendar, you can see any webinars that are coming up. Feel free to join us on those. Like I said, we do these for Nadex every Monday night, as you see here. We normally do some Thursday webinars. We've got a couple of radio shows during the week where we talk about trading, do some live trades on the radio, talk about news, market conditions, all kind of different things that are very helpful for you there. Under the news plan here, we've got a news trading plan with news calendar, let you know what kind of news is coming up to be careful for. Right here under Binary Essentials tab, third one down, Trading System Courses. Several free courses you can go through and watch, different ways we trade Nadex binaries. We talked about binaries last week, okay? But probably one of the most important ones here for you under the Questions tab, the second one down, Trading Questions Forum. If you go through here, there's a lot of free information here for you about trading in general, about trading Nadex. Definitely want to take advantage of it. If you have a free demo account, learning how to use Nadex, why not take advantage of some free education as well? Forums kind of broken down into different sections, kind of section 1, section 2, everything from psychology and risk management. But if you scroll down here to S10, this is also a complete system section where you can go through and see step-by-step training courses, screenshots, written out rules of all the different systems that we use to trade Nadex binaries and spreads. Kind of get an idea of some of the different systems that are out there, which one may suit you the best, you know, something that fits your personality, your trading schedule, and so on. If you scroll a little bit further down, right here, watch webinars here. This webinar we're doing tonight is being recorded. About an hour after the webinar is done, I will have it uploaded right here under newest webinars. If you click that, you'll be able to rewatch this webinar, and you can also go back and watch any webinars you might have missed. As you see them all right here, Monday Nadex webinars. Last week, like I said, was Binaries 101. What's better, binaries or spreads, how to trade news, how to start day trading, directional trading, all kind of webinars that, you know, if you've missed out on, you can catch up on. But in this same section here, this is just a whole wealth of a library of information here. All right, as you see right here, we've got Nadex binary webinars, Nadex spread webinars, getting started with Nadex, how to use the Nadex platform. You can go into any one of these. For example, tonight we're talking about spreads. If you check out the Nadex spread webinars, you can go through and watch the ins and outs of spreads. This gets a little more in depth than we are tonight. Directional trading with spreads, how to use them with iZone, scalping Forex and futures, all kind of different videos on spreads. So after you learn the basics of spreads tonight, if you want to go in and learn a little more about spreads, different ways you could trade them, check out this section here, Nadex spread webinars, and the very first one you want to watch is this one right here called the ins and outs of Nadex spreads. Okay, kind of broken down into 4 videos, show you a couple live trades, and then this next one here is spreads basics, which is we're gonna kind of cover this one tonight. Risk and reward, what is proximity, and what is premium. Okay, Bobo, you were asking about price quotes. I'll cover that briefly tonight, but if you want to get that answered like in great detail as far as understand exactly how those things are quoted and how they're priced and why there's different quotes and prices on the different spreads and why some are higher and lower, if you go and watch this video right here, proximity, and then this one, premium, you'll have it mastered. You'll already understand it way beyond just what I can cover tonight. These 2 videos right there will clear it all up for you. It'll make perfect sense, okay? And it'll really help you in determining which spread you should pick, okay? And once again, Bob, that's called the ins and outs of Nadex spreads, and that's under the Nadex spreads section it's under Nadex spread webinars under the forum. Okay, so a lot of free information there for you, great education. So hop on over to Apex Investing, create a free username and password, take advantage of some of that free stuff. While you're at it, head on over to facebook.com/Apex Investing. Like us on Facebook, follow us on Facebook. We do a lot of updates on here of new trading systems, new trading strategies, live trades from our trade room, any new webinars coming up. That way you can stay notified of anything upcoming and any new strategies or systems that may interest you. So check that out, some great free resources there for you. So tonight, like I said, tonight we're going to talk about the basics of spreads. What is a spread? What's the value? How to trade with reduced risk, and how to trade in any market condition. Okay, so I'm going to teach you 3 important things that you must know before you make money in trading. Okay, it doesn't matter what you're trading, whether you're trading binary, spreads, anything. All right, one of the main things that people struggle with in trading is risk management, risking too much, okay, or trading too much, or over trading, or having bad risk to reward ratios. But with spreads, we're going to show you how to reduce risk by up to 75% or more, while having stop losses that are up to 400% or more larger than what you might be used to trading now, and how that can protect you with spikes in the market, how to get stop losses for penny on the dollar, how to find the right spread for your trade, and how to know how far the market may move today. Okay, so these 3 things: reduce risk, increase leverage, and more time to be right. Sometimes you might say, hey, my charts, my indicators, my strategy or system I'm using is telling me the market's going up. Well, maybe the market is going up, but you enter a trade and then maybe the market goes down for a few minutes, or it goes down against you. Like as soon as you enter that trade to go up, the market's coming down against you, knocks you out of that trade, then the market goes up, right? So you were right in what direction it was going, but it just needed a little time to get there. But it already knocked you out of the trade because it went against you and you didn't want to take a bigger loss, so you got out, right? We've all been there. We all think, man, the market's out to get me. Somebody's out to get me. Because every time I think the market's going up and I get in, it goes down, knocks me out, then it goes up. Somebody's after just me. The whole world, the whole trading world, the whole market's after little old me, right? That's how it feels sometimes. And you have to understand that, yes, maybe you're right. Maybe the market is going up, but you might need a little more time to be right. Maybe it's going to pop down against you just a little bit and then go up. So how can you protect yourself with that? So we're going to talk about that, about how to use Nadex spreads. So Nadex calls them bull spreads, but if you buy them, you're bullish. If you sell them, you're bearish. Meaning if you buy, you're thinking the market's going up. If you sell, you're thinking the market's going down. Okay? So we like to call them box spreads because if you draw them on a chart, they kind of look like a box. All right? So now when you use margin, some of you may not be familiar with margin. Okay? When you use margin on securities, you're borrowing money from the broker. Therefore, you're paying interest to the broker on margin or borrowed funds. You know, some of you may trade stocks. If you day trade stocks, you have to have $25,000 in margin to trade stocks. Okay, you might trade futures, and you have initial margin, you have maintenance margin, day trading margin. It might be anywhere from a few $100, $500, or several $1,000s that you have to put up in margin just to get in and enter a trade. Okay, that money is held out of your account just for you to enter that trade. Okay, and as far as leverage, that varies by the different brokers in country. It could be a 1-to-1, it could be 400-to-1. Okay, in the US it's usually 50-to-1, like with some Forex brokers. Okay, or even with futures. But if you're going to trade $10,000, it would only cost you $200 in margin. But you still have the full $10,000 risk if you're getting into a Forex lot, for example. Okay, now some of this may be over your head. We're going to help it make a little more sense here. So margin and leverage vary depending on which one of the dozen strategies you use, or what instrument you're trading, or what broker you're with, or so on. Just to give you a couple examples here. Okay, so let's look at, in comparison, trading like an ETF, or trading spot Forex, or trading futures, trading future option, or Nadex spreads. Okay, so for example, if you were trading, let's just say spot Forex, okay, an actual lot of Forex, right? Your margin, excuse me, your margin that you'd have to put up just to get in that trade could be up to $3,100 just to enter the trade. From there, I mean, whatever you're profiting or losing, that's separate. That's still separate in your account. Okay, an ETF, you might have to put up $31,000 in margin. If you're trading a euro-dollar future, if you're trading the futures market, you might have to put up $500. Okay, an option, maybe $2,500. But to trade a basic Nadex spread can be $250 or even way, way less. All right, so you get a lot lower margin trading a Nadex spread. Okay, you also have a much lower risk. Okay, let's just say that you're trading spot Forex, or you're trading a future. You technically have unlimited risk. If the market flies against you hundreds of points out of nowhere, it could fly against you and hit your account for those hundreds of points. With a Nadex spread, you have capped risk. Like I said, some of this may be confusing a lot of you, so we're just going to move right on and help you kind of understand this. Okay, so with Nadex, all other products are capped risk. You can't lose more than you put up in margin. Your risk is your margin, but you still get leverage. You can trade stock indices, future commodities, or Forex pairs. And the price is driven by the underlying market. Okay, it mirrors the underlying market. It's not driven by supply and demand. So it moves in pips. Pips is the last digit quoted, and it's worth $1 per pip. So let's put it all together here. All right, so how they work. All spreads have a floor and a ceiling. So in this example here, let's say we're trading the euro dollar, and let's say the floor of this spread, the floor meaning the bottom. Just think of it as a top, ceiling, and a bottom floor, top and bottom. So the floor is 1.2400 as an example. The ceiling is 1.2500. So the spread is the difference between the floor and the ceiling. All right, so the ceiling is 2500, the floor is 2400. This is a 100 pip or tick, whatever you want to call it, the last digit quoted, 100 pip wide spread. And it moves in pips or ticks. Like I said, the last digit quoted. Each pip is worth $100, and there are 100 pips. Okay, so we've got a floor and a ceiling, and the market is somewhere in between this floor and ceiling, for example. Okay, and a spread has what's called expiration times, meaning a spread will open up at a certain time and then close at a certain time. Okay, there might be 2-hour spreads, 4-hour spreads. We'll talk about that in a moment here. So let's say that I'm selling a spread. Okay, well, if I'm selling, I think the market's going down, right? So in this example, I'm going to sell a spread. And let's say I get into it right here at 1.2490. Okay, well, I can't lose additional money above the ceiling, and I can't get stopped out. I can't make additional money below the floor and won't get stopped out. What does that mean? Well, if I'm selling the spread right here at 24.90, I'm selling saying I think the market's going down. But what happens if the market pops up against me? Well, I sold it at 24.90 right here. The ceiling is right here at 2,500. So what's that difference? 2,500 minus 24.90 is 10 pips. So I can't lose additional money above the ceiling. So let's say I sell, saying the market's going down, but I'm wrong. Let's say the market goes up and it shoots up 200 points against me, 200 ticks against me. Do I lose 200 ticks? No, because I cannot lose above the ceiling. My risk is capped. So each pip is worth $1. There's 10 pips right here between 24.90 and 2,500. So the maximum risk is 10 bucks. That is the most I can lose. Does that make sense? Because I can't lose any more above this ceiling. Even if the market skyrockets hundreds of points against me, I can only lose 10 bucks. Okay? But I sold at 24.90. The bottom is 2,400, meaning the floor. Okay, so 24.90 down to 2,400 is a difference of 90 ticks. So the most I can make, there's 90 pips of profit potential. Each pip is worth $1. So the profit potential I can make is $90. Okay, does that make sense? So the market comes all the way down, I can make money all the way to the floor because I sold saying the market's going down. Now, what happens if the market comes down? I was right. It's going in my direction, comes all the way down to the floor here, and then it keeps going down another 100 points. Like I was really right. Do I keep making money $1 per tick all the way down as far as the market goes? Or do I only make money, can't make additional money below the floor? Does that make sense why we like to call them a box spread? Because it's kind of like a box. You're inside this box. The market go up hundreds of points, go down 100 points, but you're in that box. Your capped risk and your capped profit is within that box. Okay, so you know your maximum reward potential, depending on where the market goes, and you know your maximum risk. You have capped risk. Okay, so that's if we're selling the spread. Let's look at the same kind of example if we're buying the spread. So if we're buying the spread, we're saying the market's going to go up. So it's just the complete opposite. We can't make money, we can't make additional money above the ceiling, and we can't lose additional money below the floor. So let's say that I buy in right here at 1.2410. Well, I bought at 24.10. The floor, the bottom is 2,400. So that's 10 pips. So once again, each pip is worth $1. There's 10 pips of risk in here. So if I buy, saying the market's going up, but instead the market goes down, even if the market goes down 300 points against me, doesn't matter. I can only lose to the floor. So I'm only losing 10 bucks. Now, in this example, I bought right here, saying the market's going up. Well, what did it do? Started to pop up and then boom, it came down, right? Okay, am I freaking out that it went down? No, I know I'm only down 10 bucks. And look what happened. It came back up, hesitated there, and then went all the way up. Now, one other thing. See right here, can't get stopped out. Just because the market went down and hit the floor, hit the bottom, does not automatically close out my spread. It does not close out the trade. The trade does not close out until I either close it myself or until it expires. So I'm not getting knocked out of this trade. The market goes against me. Boom, it doesn't knock me out. I'm still in the trade because I'm down the $10, the maximum I can lose, but I'm still in the trade, and I'm glad. Why? Because the market came back, and then what did it do? Went all the way up. Okay? And what happens when the market comes all the way up and it hits this ceiling? Well, I bought in at 2410, ceiling's 2500, so I've got 90 pips of potential profit there. If it kept going and going and going, am I still making money up here? No, I'm making money to the ceiling. Okay? So I've got $90, 90 pips of profit potential there. And I can close the spread at any time. If I entered here, it can come down here, and it can pop up here. I can close it here, here. I can close it any time. Whether I'm buying or selling, just depending on where the market was at the time I got in, I can get out of it at any time. If I bought right here for 24.10 and the market's coming up and it's at 24.50, I can get out right then if I want. And what would I make? Well, if I got in at 24.10 and it went up to 24.50, what's the difference of 24.50 minus 24.10? 40 ticks, right? Each tick is worth $1. So I'd be up $40 in profit. Yeah, I could have stayed in it and got more, right? But maybe something on my chart or strategy or system was telling me the market might slow down and I wanted to get out early. Maybe I couldn't stay trading. I had to be somewhere. I can close it early. Okay? I can get out of it at any time, whether it's going for me or against me. Let's just say I bought into this spread right in the middle at 24.50. So I bought in at 24.50, thinking the market was going up. But what if the market went down? So I got in at 24.50 and it's coming down and it's at 24.20. So I'm down $30. I still have another 20 that I could lose, right? And maybe I just want to get out early. I don't want to take the full loss all the way down to the floor. I want to get out early. So whether the market's going in my favor and I want to take some profit and get out, or whether it's going against me and I want to trail my stop and get out, cut my losses, I can do that. Okay? Now, if I don't get out of it early, okay, and just remember, just because it hits the bottom doesn't knock me out. Just because it hits the top doesn't close it for max profit. I have to close it. Or if I let it expire, if the spread expires, it will close at the settlement price at the time of expiration, meaning wherever the indicative index is at that time, where it closes out, what do I get? I get the difference of where I bought compared to where it expired. Okay, does that make sense? Any questions on those two basic examples of buying a spread, selling a spread, and understanding the floor and ceiling? Let me get a little feedback here. Let me know if there's any questions there. Let's clarify that before we go on. Okay, everybody says nope, clear, golden, got it. Okay, perfect. All right, so with the combination of different markets, time frames, and different spreads, means it's possible to find a variety of choices to help you find one in the right time frame with the right risk reward. Okay. Actually, we do have a question, Jason. All right, good question, Jason. I'll answer that here in just a second. Perfect timing on that question, though. And James Powell, perfect. I'm going to answer both your questions right now. All right, let's talk about expirations. Okay. Duration and expirations. What kind of spreads are there? Well, there's intraday spreads that are as little as 2 hours. There's daily spreads that can last up to 22 hours. And there's different expirations and settlements, all right? You've also got different spreads that come out. Let me show you a little bit of example on this here. Let me pull up the Nadex platform. We're going to go to Forex spreads. I want y'all to watch this section here very, very close, because this is one of the biggest confusing things about spreads right here. Most people are like, hey, I get it, dollar pip, floor and ceiling, buyers, okay, but there's all these different spreads and different price. I don't understand why there's so many different ones. Pay close attention here the next 5 minutes, and you'll get it. Okay. Some of you already know this, but let's look at the euro dollar, for example. Right now, it is 7:30 Eastern time. Any time frame you ever see quoted on Nadex is all Eastern time. Well, let's look right now at the euro dollar. We've got some different spreads here, don't we? We've got spreads that are from 6 p.m. to 11 p.m., right? So those are 5-hour spreads. And look, the spreads are 250 points wide. Let's click these. Okay. All right. So this number right here, what do you think that number is? Floor, bottom, right? What is this number? Ceiling, top. So remember we talked about floor and ceiling, floor and ceiling. That's all that is, okay? That's the spread. And this is from 1,000 to 1,250. What is that? 250 points, just like it says here. Each one of these spreads is 250 points wide. Okay, that makes sense? Now, there's also 6 p.m. to 8 p.m. spreads. These are 2-hour spreads. And what does it say? They're 100 points wide. Let's click them. Again, there's 3 of them. See, from 1,000 to 1,100, from 950, 1050, 900 to 1,000. So there's 3 different spreads. We call the top spread, the middle spread, and the bottom spread, right? Those are 100 points wide. Then at 7 o'clock, okay, so remember we said there's some bigger, there's 2-hour spreads, meaning every hour on the hour, another spread's going to come out. And it's going to last 2 hours. So this one's 6 to 8. Then at 7 o'clock, one came out from 7 to 9. Here in a little bit at 8 o'clock, this one will disappear, right? Because it expired at 8. And a new one will come up from 8 to 10. You see that? 7 to 9, 100 points. There's 3 of them. Then we've got the big daily one. This one goes all the way till 3 p.m. tomorrow afternoon. Like all the way to tomorrow afternoon. And this is a huge spread. This is a 600 points, 600 pip spread. It's from 0700 to 1300. 600 points. So if I want to go in and trade a spread right now, do I have quite a few different options to choose from? Yeah, I really do, right? What if my particular strategy or system is a longer term strategy? Like I'm not really trading for like the next 20 minutes or like the next hour. Like I look at larger bars and larger time frame charts. I'm looking for like these bigger moves. So my strategy or system may take a little longer to move. Like I think the market's going up, or yeah, I think the market's going down, but you know, I don't really worry about the quick little zigzag. Like I'm looking at the overall trend. Where's it going to be by the end of the day tomorrow? Well, if that's my strategy or system that I'm using, do I want a spread that expires in 30 minutes at 8 o'clock? Or do I want one that expires in an hour and a half at 9 o'clock? No, I want the daily spread. So I have till tomorrow, right? And I like that it's a pretty big spread. I've got hundreds of points in there. And look, there's 50 available. I could do more than one, right? Or well, hey, my particular strategy or system is looking for short term, like the immediate trend of the market. What is the market doing right now? I'm using smaller time frame bars. What's the market going to do in the next 30 to 90 minutes? That's what I want. Okay, well, I might not want the 8 p.m. spread because I only got 25 minutes left on that. But on the 9 p.m. spreads, I still got an hour and 25 minutes. Those might be the ones that I'm looking at. Or, does that make sense? Everybody's strategy and system is different. So whatever type of strategy or system you have, whether it's shorter term, mid-term, or long-term, you've got plenty of spreads to choose from. Okay? So, now that you see that part, some of you know the answer to this question already. Okay? Without looking at, okay, see this spread right here? What time did these spreads open up? 6 p.m. Almost an hour and a half ago, right? Everybody understands that, right? They opened up at 6 p.m. Without looking at a chart and knowing what the euro dollar was at an hour and a half ago, who can tell me from this screen right here, where was the euro dollar at 6 o'clock when these spreads opened up? Can anybody tell me that without looking at a chart? Okay, exactly. John's got it. 1.1000, okay, is where the euro dollar indicative was at. Okay, James Powell, this is to answer your question. James' question was, what determines the floor and ceiling? All right, at 6 o'clock, basically 2 minutes before, okay, at 5:58, basically, okay? 2 minutes before a new spread opens up, whatever the indicative index is at, meaning whatever the underlying indicative index is, the Nadex indicative right here, this is the current market price, the current Nadex indicative price. Whatever that indicative is at, basically, and they round it off to an even number or whatever, whatever that is at determines how the spreads are figured. So at 6 o'clock, the euro dollar was at 1.1000 approximately. So how do they determine, James asked a good question, what determines the floor and ceiling? They got 3 different spreads. How do I know these floor and ceilings? That's exactly how you know it, James, and here's how they do it. So right at 6 o'clock when these opened up, the market was based at 1.1000. Okay? Actually, let's look at these. Let's look at the 6 to 8s. They're just easier. So we know that every 2 hours, these 2-hour spreads are how wide? 100 points, right? So if the indicator is at 1.1000, boom, guess what? They make a spread that has a ceiling of 1,000 going down 100 points, right? Then there's also a spread with a floor of the same thing, with a floor of 1,000 going up 100 points. Then there's a spread in the middle where 1.100 is right in the middle, and it goes down 50 and it goes up 50. So there's 3 different spreads, top, middle, and bottom. And what determines those floors and ceilings is this number right here, wherever the market was at 6 o'clock. Does that make sense? So wherever the market is at 6 o'clock, imagine that number being right here in the middle, this middle spread. And you've got 50 ticks down, 50 ticks up. Then you've got that same number as a ceiling of one spread, floor of another spread. Does everybody follow me there at all? James, does that make sense? And that's a great question, James, because that's confusing to a lot of people. They're like, what is this all about? Like, how are these determined? Okay? And that's how they're determined. And maybe that will make this make a little more sense here. Okay? Because let's say that right at 6 o'clock, let's say the market was at 1.3 thousand. Well, so this line right here is 1.3 thousand. So you have a spread that has a floor of 1,3,000 going up 100 points. You've got another spread that has a ceiling of that going down 100 points. And then you've got one that's kind of right in the middle, where it's 50 up, 50 down. Does that make sense? So all three of them are 100-tick spreads. But one has a floor, one has a ceiling, and then one's right in the middle. So what happens when we're in the middle of an hour, like right now, 7:40? Hey, I want to place a trade, but the market has moved since these opened up. So a spread may not be right at the ceiling or right at the floor. It will be close, but I know I can also get the one that's right in the middle. Does that make sense? Anybody having trouble hearing me? A couple of people saying the audio was cutting out a little bit. We coming through better now, Emmanuel and David? Okay, sorry about that. I was having a little bit of choppy internet issues going on earlier. Okay, does everybody understand how that is figured now as far as floors and ceilings? Does that help anybody? Was there anyone else that was confused on that clarifies for right there? Derek, for currency per time frame, are there only 3 options for spreads? Each new spread that comes out every 2 hours, there's 3 new ones that come out. But you're always going to have multiples. Like right now, you've got these 6 to 11s that are 250 points wide. You've got the 6 to 8s that are 100 points wide. Now, since they both opened at 6, they have the same floor and ceilings, but these are a little wider. These that opened at 7 have a different floor and ceiling. And then what do we know is going to happen here in 18 minutes when the 8 o'clocks open up? There's going to be 3 more with a little bit different floor and ceiling. Then we still have the daily that we can get in any time. Okay? So I'm not sure if that quite answered your question there, Derek, but yeah, you won't just have 3 options, because like at 8 o'clock, so let's say here in 18 minutes, it's 8:01, right? These are going to disappear, right? The 6 to 8s, because it'll expire at 8, so they'll be gone. But we'll still have the 6 to 11s we can get in. We'll still have the 7 to 9s. Then we'll have a new 8 to 10 with 3 more, and the daily. So there will technically be 3, 6, 10 different. If it was 8:01, we'd have 10 different spreads we could get into right now to choose from, with different floors, different ceilings, different widths. There's always an option there. Okay? So there's always different options there. Okay. Sandra, did you have a particular question on that? You said you needed a little more of an explanation on that. Let me know if there was a particular question you had on that. Okay, so that is how the different spreads are figured. Okay, so let's look at something here. Let's just say, for example, just as an example, that I wanted to buy a spread. Okay, and say I wanted to buy this spread right here. Okay, and this is to answer Jason. Jason said, how do you close out a spread early? Okay, because remember we talked about that. Remember we talked about just because a spread hits a floor or ceiling doesn't automatically close it out. I either have to close it out early myself, and I can close out a spread early whether it's going for me or against me, or I have to hold it till expiration, right? Okay, so I bought that spread. See, and it went into my open positions right here. I bought it. See where it says +1? If I'd sold, it would say -1, just to show whether I was buying or selling. Okay. So I bought it, and I bought it right here at 1.1006. So if I buy a spread, see, here's the spread. Here's floor and ceiling. I got an hour and 15 minutes to expiration. I can sell a spread for this price or buy a spread for this price. Offer is what I can buy it for. Bid is what I could sell it for, right? So I bought it. Well, if I want to get out of it early, if I buy something, how do I get out of it? I got to sell it, right? What can I sell this spread for right now? I can sell it for this listed price right here, right? So check it out. So average price that I bought it for is right there. Current market is what? 0.999, which is the same thing as this, 999, right? So what's the difference of where I bought it compared to where it is now? Is $7 or $8. Does that make sense? Okay, so if I want to close this out early, let's say it went down and I'm down 20 bucks and I want to get out so I don't lose any more. Let's say I bought it and the market went up 20 bucks and I just want to close it and take my profit. Well, to get out of something I bought, I have to sell it. So how do I do that? Well, it's already in my open positions here. Like I'm in this trade right now. So if I literally just click this, it opens up a ticket automatically and it's already marked sell, right? And I hit sell and it's gone. It sold it back, put the money back in my account, minus either the profit or the loss. So it's that simple. If I want to buy something, I buy it. If I want to get out of it, I just click it and go the other way. Does that make sense? Did you see, Jason, did you see that? Yeah, James, I had that happen to me the other day. I just had to sign in and out. For some reason, my order wasn't showing up properly in the open positions, and I just had to sign in and out. So sign in and out of it, like clear your, if it's giving you trouble still, like clear your cache and history and all that. And that should clear it up for you. If it doesn't, just give Nadex a call. I know they were working on some demo stuff earlier. Okay. Let's see. How do I know when to get out of a spread I bought? Well, Emmanuel, I mean, that's up to you. That determines your strategy or system determines that. You know, I mean, if you buy a spread and it's going up and you're being profitable and you're up, but let's say your strategy or your indicators on your charts are telling you, hey, the market might make a reversal. You might say, well, I want to get out now then. I didn't make my full profit that I could have made if it kept going, but I'm up, I'm profitable. If I think the market might be turning around, I just want to close it out now and keep what money I've got, you know? Or if you say you buy a spread and it's going against you, the market's going down and you're down, and let's say your stop loss is set at 20 bucks. You're like, okay, I'm going to get in the spread, but if I'm wrong and it goes against me 20 bucks, I want to get out. That's the most I want to lose. Well, then that's when you'll get out. I mean, there's no right answer for that. That's up to you, depending on what strategy or system you're using. Okay. Patrick, so how do you set up to protect yourself with the spread you mentioned earlier to cap your loss? Well, that's kind of what I was just talking about there, Patrick. You can do it two ways. For one, either you already have it preset that you know yourself. When I say preset, I mean in your own mind. Okay, there's not a stop loss setting in Nadex. Okay, but let's say you buy a spread and you say, actually, let me pull it up. Let me pull it up this way to answer your question, Patrick. Hold on. Okay, let's say that let's say that you've got into this spread right here. Okay, so we got ceiling 2,500, floor 2,400. Let's say you got in right here at 2,450. Okay, and so what's the difference of 2,450? Say you're buying it. What's the difference of 2,450 down to the floor? 2,400. So you technically can lose $50 on this trade, technically, right? Well, let's say that you already know for yourself, hey, I don't want to lose more than 30. If I'm wrong and it goes against me 30 bucks, I don't want to take the full 50 hit. I'll risk 30. So you're wrong and the market's going against you. You're down 30 bucks. You just close it out and get out of it. Okay. So, but you also know going in, yeah, you've got $50 risk here if the market goes down. But if the market goes down 500 ticks, you still only have $50 risk. That's how your risk is capped, is that you know no matter what, you can only lose money to the floor. No matter what the market does, you can only lose money to the floor. You can get out earlier and save some of that. Or remember the example where we bought right here at 24.10? Well, you only got $10 at risk. If you've only got $10 at risk from 24.10 down to 2400, are you worried about a stop loss? No, you're just going to, you know what I mean? You're going to leave it. You don't want to close that out because it could come back up, right? It's only $10 at risk. So, you know, you can either try to get something that's close to a floor or ceiling that limits that risk, or wherever you get into that spread, you set your own limit to the risk of, hey, if it goes down against me more than a certain amount, I'm out. But you always know no matter what, you're only open to risk till the floor there. Okay. Let's see here. Just checking up on some questions here. Narev, what's the benefits of going spreads versus binaries? Narev, that's actually a very long conversation, but you're in luck because hop on over to the Apex Investing website. I actually did a webinar on that 3 weeks ago, I believe. Okay. Go over to the apexinvesting.com, go in questions, trading questions forum, and scroll down here to watch webinars here. See right here, watch webinars here. Go right here, newest webinars. And yep, just 2 weeks ago, Monday Nadex webinar 11/30/2015. What are better, binaries or spreads? I go through pros and cons of binaries versus spreads, show you a few different market examples, how one can be better or different in different markets. That should answer any question you might have there on what are the pros and cons of each. Okay. And there's a way for a buy or sell option that automatically does either. Craig, okay, maybe you answered this now. Craig, did your question get answered there? I'm not sure if I quite understood it, but you said that looks like we got it answered there. Let's see here. If you enter two spreads exactly when the new ones start at the beginning of the hour, neither one in the middle, then you have to leave the house. Can you set an automatic out, one for the upper and one for the lower? So loser. Okay, on Nadex, there is not a stop feature on Nadex. Okay, but you can set a take profit order. Okay, what do I mean by that? Well, okay, let's say that I want to buy this spread right here. Okay, and I click that price. See, it's 1003. If I did place order right now, what would happen? Would it execute the order or would it go into working orders? Well, I can't buy it for 1003 anymore, can I? No, because it's at 1005. Every order on Nadex is a limit order. Whatever price is right here, that's saying I will buy this spread for this price or less, but no more. So if I say place order, well, hey, what happened? It's not in here. It's not in open orders. Where is it? It's up here in working orders. Well, why is it in working? Why is it in pending? Well, because the market didn't get down to where I placed that order at yet. It was above it. Okay, so what's my point of that? Well, okay, see right there? It went down to it's filled. So if I place an order to buy something or sell something for a certain price, but the market's not at that certain price yet, it's going to sit in working orders until the market gets to that price. Does that make sense? If I say, okay, so right now I can buy this for 1005. Well, I only want to pay 1002. Well, my order is just going to sit there until this happens to go down. If it does go down to 1002, boom, then it'll fill the order. That makes sense? All right, so I bought this right here. See, +1, I bought it. And it's this spread right here in the middle. So I bought it saying the market's going to go up. Well, let's say that I have to leave the house or whatever. Alan, I think that was your question, Alan Hernandez. So let's say I have to walk away, right? Okay. Well, let's say I'd like to make 20 bucks on this spread. Okay. Well, if I bought it for 1006, if I want to make 20 bucks, that means I have to sell it for what? 1026. Correct? If I buy it for 1006, but I want to make 20 bucks, that means I got to be able to sell it back for 1026. Well, what can I sell it for right now? 1003. Right? So I can't sell it for 1026 just yet, can I? So remember I showed you that if you bought and you want to sell out, or if you sell and you want to buy out, you click it. It's already marked sell, and the current price is already filled in here. So what do? I change it. 1026. Place order. Did it close out my trade? No, it didn't close it out because the market's not there yet. But that order is set there. Okay? That order is set to where if this gets up to 1026, boom, it's going to sell me out of this and let me take my profit. Does that make sense, Alan? So, yeah, so if you had more than one position open, that's how you would do it. So that's how we have it on the buy side. Let's say that on this one I had sold, say I'd sold this spread, okay? So I'd go into my sell side, click it, and say, okay, I want to buy it back at whatever number I want to put in there. So those orders are in there working, okay? All right. So, yes. So what determines these prices? What determines where I can buy it or sell it? What determines how the market is moving? This right here, the Nadex indicative. All right. And I think somebody was just asking about that. Yes. Patrick asked, what is the indicative index? I thought that was where the current price is. This is where the current market is. All right. This is the Nadex indicative. Now, if you have a chart up, it might be a couple of ticks different than this, because the way that Nadex does their indicatives is they take the last X number of orders and they get rid of the lowest 5 and the top 5, and they average out the middle ones to protect you from spikes. It's the indicative index. It's the current Nadex indicative price. Now, I think what you're asking there is, wait a minute, why are these prices different? Well, this market makers and other traders make up liquidity. All right. Like this is other people buying and selling. These are market makers. What's a market maker? Well, a market maker, you can Google it and get some more info on market makers. We're not going to have a long talk about it, but market makers are basically someone that makes a market. They're a market maker. This person will let you buy from them for this, and they'll sell to you from this, or they'll buy from you for this and sell it to someone else for this. The difference here, like these $4 or $5, that's how they make their money. That's what's called the bid offer spread. All right, they're just a middleman. They'll buy from you for this and sell to you for this. They're making a market. They're making liquidity. They're making contracts available to both buyers and sellers. And they're just taking a few dollars in the middle. Okay, so that's why what you can buy for is a little bit different than what you can sell for. And as you see, there's a lot of contracts out there. Okay, now the current market, for example, all right, again, since you have different spreads, some that are right at the floor, some that are right at the ceiling, there might be a couple of dollars of premium in there as well. Okay, meaning the market might be at 1009, but if you're going to buy this particular one, you can buy into it at 1003 or 4. There's a couple of dollars difference in there. All right, but whatever this price is listed is where you're buying and selling in. Okay, let's see here. Derek, it can be either one. It might be the actual market maker, or it might be another trader out there, like me or you, putting in buy and sell orders. Okay. Let's see here. Sandra, if you go for the ceiling, is that what the option to sell and going to the floor should be for buy? Sandra, not quite sure what you mean. If you buy a spread, you're wanting the market to go up as close as possible to the ceiling. If you're selling a spread, you want the market to go down to the floor. Okay, so buying is up, selling is down. Okay, so tonight we've talked about some examples showing Forex, but Nadex provides spreads on 10 different Forex pairs, commodities, meaning corn, soybeans, oil, natural gas, gold, copper, silver, U.S. indices, some international indices, stock indexes, all kind of different options there for you with spreads, okay, daytime and nighttime. So any particular questions about how spreads work? Does everybody understand? Let me show you a quick example here. Let me show you a comparison. Or before I get to that, any other questions? Okay, Sandra, if you buy at the ceiling, you're not really accomplishing anything there. If you buy, you want the market to go up. If you buy at the ceiling, remember this, can't make additional money above the ceiling. So if I buy right here, I can only make money to right here. That's it. I don't want to buy at a ceiling. I want to sell close to a ceiling maybe. But if I'm buying at the ceiling, I can only make money to the ceiling. Okay? If you buy, you want the market to go up. If you sell, you want the market to go down. But you can only make money when you're buying, you can only make money up to the ceiling. So if you're buying real close to the ceiling, you're not really giving yourself any room to make money there. Does that make sense? Or like if you sell right here, you can only make money from here to here. So you want to sell with there to be room going down to the floor. You want to buy with there being some kind of room going up to the ceiling. Does that make sense? Okay, so yes, the ceiling and floor are your caps, whether that's your capped risk or capped reward. It's like, I mean, we're not talking about binaries tonight, so I don't want to get into that. But I think, Sandra, I think you understand binaries. At expiration, they're worth 0 or 100, right? Totally different than spreads. you don't want to buy a $97 binary, right? Because the most you can make is that would be like buying a binary right here at 97, and all it can ever be worth is 100. Like you're buying it just right close to what it's the max it could ever be worth. Does that make sense, to put it in a different term? So you want to have some, some room there to make some money. Okay. All right. So let me show you a quick example here of what we call the whipsaw elimination strategy. All right. Basically, just to help you understand a little bit here, the power of spreads and the massive amount of leverage. So we're going to do a quick comparison. Then we're going to wrap up. We're going to do a quick comparison of a Nadex spread compared to an underlying spot Forex market. What I mean by that is, as an example here, the pound dollar. Let's say I was trading an actual spot, an actual lot of Forex. Not binaries, not spreads, actual Forex. Okay? So let's say that I sold, so I'm looking at my chart, right? And right here, I decide, okay, I think the market's going down. So I'm going to sell right here at 1.5685. Okay? I think the market's going to go down. But I want to have protection, right? Like I want to be ready. What if I'm wrong and the market goes against me? So I think the market's going down, but I'm wrong and the market goes up. So every tick that it goes up, I'm losing money. What am I willing to risk on this trade? Where do I want to put my stop loss? What's the most that I want to lose on this trade? Let's just say, for example, that I was, had a larger account and I'm trading Forex. So I have to put up in margin, I got to put up over $3,100 just on hold from my account just to enter this trade, much less what I could risk. So I say, you know what? I don't want to risk more than $650 on this trade. So if it goes against me, I'll let it go against me $650 and I'll get out right here at this line. So I'm entering right here to go short. But if it goes all the way up here against me, I'm going to get out right here because I don't want to lose more than $650. Does that make sense? So I place the trade. I enter the order. What happens? Boom. What happened right there? It popped against me, didn't it? It popped against me. It went to here. I closed the trade, right? Because I got kicked out because I set my stop loss here, $650. Bam, hit me. I'm down $650. I lost $650. I'm down $650 for the day. The trade is closed. I've got my margin money back, but I'm out $650. I lost. Then what happens? Next bar. Oh crap, look at that. I was right. The market was going down. But it just happened to pop up against me first before it went down. Has anyone ever had that happen? I know every single one of you have. Tell me. I think the market's going this way. I entered the order. Man, it went against me and I got stopped out. Then it went my way. And like I said earlier, we all think, man, it did that just to me. The whole world is out just to get my order. Like I feel it. I know they're out to get me, right? Yeah, it happens all the time. And we literally think that to ourselves, don't we? We think, man, somebody's out to get just me, right? But we know deep inside the whole world of gold and oil and stocks and Forex is not after our one little trade. Just how the market works. The market moves, right? Yeah, Felipe, I had somebody tell me that before of, if you really think that the market's out to get your order, you're ridiculous. And I know you're wrong because they're not out to get your order. They're out to get mine, because it happens all the time, right? Right, and you feel like that. Okay, so that can happen, and that's just trading. You think the market's going to go down, but you know it could go against you, but you don't want it to keep going against you forever and just drain your whole account, right? So you put a stop loss in there somewhere, an area where if it goes against me all the way to here, I want to get out because I don't want to lose any more than that, right? Everybody follow this example so far. Now we lost 650 bucks there. Okay, let's look at another example. Let's say that I am wanting to trade the same thing, pound dollar. Okay, well, let's say that I found a spread. And I see the box here. Remember we called them box spreads? I'm drawing the spread. So let's say I found a spread that had a ceiling, a top of 1.5700. And let's say this spread was a 250 tick spread. Okay, so we're at the exact same situation here. A spread is how many dollars a tick? $1 a tick, right? Okay. On Forex, the Forex example I showed you, if you're trading like spot Forex, it'd be $10 a tick. So if I wanted to trade a spread the same way I trade spot Forex, how many spreads would I need to equal $10 a tick? Yeah, okay, because a Forex is $10 a tick, a spread's $1 a tick. So if I did 10 spreads, it would be the same thing as doing spot Forex, correct? So the market, okay, is at 1.5665. The market's right here, okay? I'm sorry. The market's right here. Same place it was before when we sold, okay? But I found a spread that has a ceiling at 5,700. And I can get into the spread right here, okay? So I'm going to sell 10 spreads. From where I'm selling to the ceiling of the spread is 35 pips, which is $1 a pip, $35, right? Times 10, because we're doing 10 of them. Does that make sense? Everybody follow me here? Stop me now if you don't. So this is the same exact trade. I want to enter around the same exact place. Okay, and I found a spread that has a ceiling close to where I'm selling. So really my risk is what? From where I'm selling to the top of the spread. So 10 spreads, so technically my risk is 350 bucks. And how much money do I have to put up in margin then? I only have to put up my risk, right? With a Nadex spread, the only amount of money I have to put up is my actual risk amount from where I'm selling to the ceiling. All right? So what happens? Same exact thing. We enter the trade thinking the market's going to go down. Market doesn't go down. Market goes up. Boom. Goes all the way up to the same place it did a minute ago. And remember we had that with trading Forex. Remember we had that stop up here? And so what did it do? Kicked us out of the trade, right? Trade closed, trade done, lost 650 bucks. Remember? Well, what happened with the spread? I knew exactly my risk, 350 bucks. It went against me. When it hit the ceiling of this spread, does it close the trade out and I'm down 350, or is the trade still open? Trade's still open, right? just because the market popped up, hit the ceiling and kept going, did not close out this trade. This trade is still open until expiration, right? And what happened? Came back down, just like before. And it expired at 155.89. So from where I got in to where it went down, boom, profited 760 bucks. Everybody see that difference there? See the power of that? So when I was trading spot Forex, my risk was 650 bucks. Because remember, I had that stop loss up there. I had to put up, out of my account, I had to put up a margin of over $3,000. And my end result was losing 650 bucks. On the Nadex spread, my capped risk going into it, I knew the most I could lose was 350 bucks. The margin, the amount that I had to put up, was only 350 bucks, not 3,000. And what was my end result? I actually profited instead of losing, because I have this capped risk right here. And the market can pop up, and then I have more time to write and come back in my favor. As opposed to this example back here, remember when it popped all up, oh, I can't get back to it there. Remember when it popped all the way up here and hit my $650 risk? Everybody understand that? That's what we call the whipsaw, where it whips against you and kicks you out. You don't have that same issue with Nadex spreads because you have that capped floor or ceiling. Okay, so that is just me showing you an example of, and I'm not telling you not to trade spot Forex. We have people that trade it all day long with us and in our rooms and stuff like that. I mean, I'm just showing you an example here of the power of Nadex products, the power of capped risk products. You have that floor and ceiling there as your protection. It doesn't just automatically kick you out of a trade. You can do multiple contracts. And especially if you're trading with a smaller account, look at the difference of your risk. Much lower risk. Look at the margin. Just to get into that trade, instead of putting up $3,000, you only had to put up 350 bucks. You know what I mean? So very big difference there. Okay. So let's see here. Let me check any questions here. So James, I'm not necessarily saying that spreads are better than this or better than that or best for you. You have to decide that for yourself, but I'm just kind of showing you there an example between spot Forex and spreads. You know, right there, you can see the power of that, okay, of capped risk, lower margin. You know, so if you have a smaller account, yeah, I'm going to definitely, I mean, smaller to even mid-range account, I'm going to tell you, yeah, you need to definitely be looking at spreads, okay? Because yes, the flip side of that is, yeah, let's just look at this. This particular spread here, remember what I say this spread was? Spread ceiling was 1.5700, and the floor was 54.50. So in a sense, yes, this ceiling is capping your risk and protecting you. But let's say the market shoots down. Well, yeah, in a sense, someone brings up, you know, so yes, it protects your whipsaws, but it limits your profits as well. Well, because you're saying, well, if the market just kept flying down here, I'm not really going to make any money below here. Well, first of all, that's a 250 pip spread. How often is the market moving 250 pips? Not very often. It can, but are you really limiting? Are you more worried about, well, this could limit my profit though because of those rare times that the market goes more than 250 pips in a few hours? Are you more worried about those rare times it does that, or more worried about keeping this right here in check and keeping your risk capped? But let's say the market is flying down and the market moves past the floor of your spread. Are you just out Are you just, oh well, can't make any more? Or do you go right here and just get into the next spread? If the market's flying in your direction and blows through a floor, just get in another spread. You've got other spreads to choose from. You've got a daily spread that lasts hours that are 600 ticks wide. You've got a new spread that's going to come out. You can always get into another spread. So don't really look at it like it's limiting you. Does that make sense? Does that make sense, Derek? Like, I get your point there of, well, yeah, but I'm limited down here. Well, but you also got a 250 pip spread in this example. I mean, it's very rare the market's going to go past that. Okay. I mean, let's look at something real quick here, Derek. Euro dollar, okay, 250 pips right there. So if I were to sell any one of these spreads, okay, and it blew through it, I just got to check out the next spread. Or again, this daily spread is 600 points. I can just hop into that one and let the market keep flying. You know what I mean? Like, you've always got an option for another spread there, okay? Or you also know that on the hour, top of the hour, more coming out. You can always just hop in another one, okay? So guys, did this help at all? For any, especially for any of you that are new to spreads, didn't quite understand how they worked, or didn't quite understand how they're figured up as far as these different spreads that are out there. Does this help at all kind of bring spreads all together a little bit and like, okay, I think I understand a little more how they work? Okay, good. So I want to show you one other thing here. For those of you that are interested in spreads and want to learn a little bit more about them, okay, if you go to the Apex Investing website, get that free username and password. Again, questions, trading questions forum. Okay. If you scroll down here to watch webinars here, again, this webinar we did tonight, I'm going to have it uploaded right here under newest webinars. But just go right here to Nadex Spread Webinars. All right, and the next thing you want to watch is this one right here, like I showed earlier. I mean, there's a ton of spread webinars in here. Picking the right spreads, misconceptions, iron condors, all kind of different ways you can trade spreads. But where you want to start is right here, the ins and outs of Nadex spreads. Now, what we covered tonight is basically this part right here, the overview. But you should watch this risk reward, proximity, and premium. This kind of explains some of the spread pricing a little bit and explains to you like why at certain times would you want to choose a spread that's close to a floor or ceiling compared to why you might prefer to choose the middle spread. Kind of helps you understand like how to pick the best one. You know what I mean? So check those out if you want to get a little more information about spreads. Okay, Manuel, I can't get into that tonight because this is a Nadex webinar. But if you shoot me a question over in the help desk, okay, it's right here under questions, help desk, right here, submit a help desk. Just address it to me, and I can get that question answered for you. Okay, good, Sandra. I'm glad this was helpful. Let's see here. Yeah, Alan, if you'll do the same thing, if you'll ask for that over on the Apex site, this is a Nadex kind of educational webinar. We can't really get into some of that on here, but I can definitely answer that for you. If you ask me over on the site there, I can direct you, no problem. Let's see here, David. Yeah, want to be my broker. Can't be your broker. I'm not a broker, but more than happy to help you learn some strategies and systems for you to be able to trade on your own and be your own broker and your own guru there. So, okay, guys. Well, I appreciate your time. Again, I hope this was very helpful. Hope it helps put some stuff into perspective for you and show you a little more, help you understand what are Nadex spreads, how do they work, what are some of the benefits and power to the capped risk aspect of them, especially if you're a newer trader or smaller account trader. But hit us up over on the Apex site if you have any questions about different ways you can trade spreads. Or like I said, go to that forum section there. If you want to see kind of the way that we trade spreads, our #1 way we trade them, go to this tab right here. Okay, Apex. Go to the third step down right here. It's called iZone Sharpshooter Course. This is the #1 way that we trade pretty much anything, but especially spreads. Kind of goes through, and you can watch these videos, see our charts and templates, when we enter, when we exit, how we trade them, how to use a spread scanner, quick spread training, simple method to choose the right spread, smaller account method for Nadex spreads, like right there. That's what you want to watch. Let us know if you have any questions on it. Okay? All right, guys. Well, I appreciate your time. I look forward to answering any questions you have over on the Apex site. And if you and we hope to see you. Like I said, we do these webinars every Monday night, 7 p.m. Eastern time for Nadex. So hope to see you next week on the webinar. Again, hop on over to facebook.com/apexinvesting. You'll get notified of any new webinars coming up, the registration links for the webinars, and anytime there's new recordings and stuff like that. Okay? All right, guys. Thanks so much. We will see you next week. Have a good one.